Section 31 of the Central Goods and Services Tax Act, Tax Invoice. Section 31 of the CGST Act establishes a framework for issuing tax invoices, ensuring transparency and compliance in documenting taxable goods and services. It's crucial for tax professionals to understand the rules and scenarios for issuing invoices, as following this framework maintains accurate records and fulfills GST obligations. Registered suppliers of taxable goods must issue tax invoices before or at the point of removal of goods, when goods involve movement, at or before delivery or availability, for non-movement cases. The invoices should include the description, quantity, value, tax charged, and other prescribed details to ensure proper recording and compliance with GST law. For taxable services, registered persons must issue tax invoices before or after delivering the service, but within a prescribed period. These invoices should encompass the service description, value, amount of tax charged, and all mandatory particulars to meet legal requirements. The government, based on the GST Council's recommendations, may mandate specific conditions for issuing invoices for defined categories of goods or services. This provision empowers regulatory bodies to enhance flexibility and compliance mechanisms for diverse industries or transactions. For transactions conducted before GST registration, revised invoices can be issued within a month of obtaining registration. For supplies valued under 200 rupees or exempt goods services, a bill of supply is sufficient instead of a tax invoice. In cases of advance payments, a receipt voucher must be provided. If the supply is cancelled, a refund voucher should be issued to acknowledge the returned advance appropriately. For continuous supplies of goods or services, tax invoices should correspond to milestone events, successive payments, or statements of account. For services specifically, invoices must align with due payment dates or after the completion of predefined events. When goods are sent on approval for sale or return terms, tax invoices must be issued during supply or within 6 months of removal, whichever occurs first. If a registered recipient receives goods services from an unregistered supplier, they must issue a self-invoice upon receipt. When payments are made, a payment voucher should accompany the transaction to confirm compliance. Section 31 of the CGST Act outlines tax invoice issuance, promoting clarity and compliance in the GST system. Understanding these provisions helps tax professionals assist clients with invoicing and compliance, enabling accurate records and preventing legal issues.